A very good afternoon to you. I'm Howard Feldman. This is the Synthesis Podcast, where we take a look at various interesting items. Today, I am joined by Synthesis's CIO, that is Tom Wells. Tom, good afternoon. How are you?
Hey, how's it, Howard? How are you doing?
Yeah, very, very good. Thank you. So what we really wanted to chat about today is banking. Where is this industry going? So the banks used to be, I'm just thinking of that Mary Poppins movie where the banker was this, obviously all male, but he represented the establishment and authority.
Yeah.
And protected everybody's money. Well, I guess banks still do that, but things have really changed. Our bankers today are quite cool, aren't they, in many ways?
Yeah, I guess so, Howard. I think when I think about banking specifically, it's a bit of a for me it's a bit of a contradictory sort of thought in my head because certainly for today, I sit here, I think, as sort of like a chief technology officer of a software company that primarily writes a lot of software for banks. But I also sit here as a consumer of banking services. As an individual who receives a salary into a bank account, and I've got my own personal payments that I need to make, and I've my own particular interests and subscriptions, and I'm an engaged sort of citizen in the world, right? And I need to make use of banks. So, and I have to say to you that as a consumer, I feel incredibly underserved, I suppose, by banks. And I don't think that's like a surprising statement, I suppose. I think a lot of us, certainly me, I'm not a millennial and I'm not a Generation Z type of person. I'm sort of in my late 30s, let's call it. And however, I'm very much a technologist, right? My whole day is driven through systems that automate and make my life easy. I'm able to deliver food to my house. I can get groceries delivered. I can watch anything I want on TV. I can find content on any topic on YouTube, et cetera, et cetera, et cetera. However, when I think about my bank, I think, this is the old world. So every time I need to do anything that relates to making a payment or setting up a debit order or wanting a loan or trying to get some financial advice or whatever it is, I feel I have to flip into into almost the age of my father.
Right.
And it's like
adult mode. Yeah.
Yes, I have to flip into adult mode. Yeah. And I think I see that as one of the big opportunities in banking, in the next couple of years is to really cross over from that really actually archaic mode of operation into this more digital and actually more involved type of model. So when I think about banks, I think that they're very inward focused. They kind of sit there and they look internally at what are their products and what will people come in here to buy from us, and how can we try and pitch these new ideas that we've got inside to our customers, as opposed to being very outward looking and saying, actually, how does Howard's life roll, from hour to hour and month to month and year to year, and say, how can we get involved in that? You know what I mean? And I think that the sort of most successful companies are the ones that are more outward facing. It's the kinds of companies that have physically pushed themselves into your life. And so I know it's quite a high level fleeting comment, but I do think that's the big opportunity for banks, is to look more outward and reinvent themselves actually as a customer-centric entity, as opposed to a product-centric or a more defensive mode. They need to become more involved in my life. And if I think about their potential to do that, it's immense. They have the amount of data that banks have got at an individual level about your particular behavior is probably more than anyone, more than any other. Maybe Facebook, is competitive from a social media perspective. But if you look at your spending patterns, that probably tells you a ton about who you are as a very specific individual, your particular needs, desires, profile, whatever it is. And I just think banks have not crossed that threshold of going, actually, we know so much about our customers. Sorry, go.
Well, they do, because you'll get a fraud. I've got a fraud alert before on my card because somebody bought KFC in Vereeniging, and that's outside of my buying pattern. So
Yeah.
so they know
Yeah.
that I'm never going to be buying KFC in Vereniging,
Yeah.
which means but that's to protect me, and that's almost in the negative,
It
rather than
is.
what you're saying is, but hold on, if you know all of this stuff about Howard, what else can you do to make his life easier, more efficient,
Yeah,
and
yeah.
how can it be more relevant, really?
It's such an excellent example, actually, and you're quite right. That's like, and fraud absolutely is very defensive. So I think it's someone is trying to steal something from you, Howard, which may have some ramification on the bank, and so we must prevent this thing. We must be defensive, and so fraud systems are very powerful at picking up these anomalies, and that's awesome. But now imagine pivoting that into a more positive sense, which is to say, you know what, Howard, we know we know that you generally go on an annual vacation in November. We can see this. We know this. We know how much it cost you last year. We know where you went. We know how long you saved for it because we can see it. We know that you came back and you were in some sort of deficit. You overspent. Why don't we preemptively start to work with Howard to say, you know what, like if you want to have another holiday like that one where you drove to Cape Town or whatever it was, like, what would be great is if you started to put away, 2,000 Rand a month for the next 4 months. That's really going to make your holiday so much better. Like, isn't that an awesome spin? I mean, that's what I want. That's what I want from my bank, is someone to really like get involved. And I'm quite happy for them to be able to profile my behavior, but then use it in a way that makes me a better person, and improves my life. And then I'm hooked. I mean, for now, for me, the ability to switch bank is really difficult. I got to switch debit orders and cards and all that stuff. So I'm not like switching, but other than the fact that it's hard to switch, I would happily switch, to someone who had that kind of mechanism, something that's potentially more social, more data driven. So I do see that as a huge, more agile. Yeah, 100%. More involved in my life, Yeah.
Which is so interesting because we're so nervous about data, but as you said, the banks have more information on us than almost anybody else does.
Yeah. And it's kind of willingly, I mean, you do willingly give that data to your bank because it is, like your financial situation. I mean, the bank, you do have this huge amount of trust in them, and they've got a very, set of secure systems and all this good stuff and anti-fraud. And so I have a huge amount of trust in them as a way of protecting my money or my value or my wealth or whatever it is. But then use that. Why not? I mean, you have it, as opposed to Facebook, where it's like, okay, so they're kind of monetizing it, outside of me, whereas I'm actually monetizing the bank directly. If that makes sense. Yeah.
How does South Africa compare to the rest of the world?
Yeah, that's a very good question. So I think, I mean, I'm certainly not like a banking expert, so I can't really. I mean, I've never banked in any other part of the world except for the US, but that was like 12 years ago, and they're a very different system. But I do think, interestingly, there is this. It's not so much about other countries, but maybe more around globalization, right? So this idea of being inspired by maybe the neobanks or the digital only banks that we're seeing certainly like flow back into South Africa. So there's N26, I think, was one of the first neobanks, which is really a digital only. I mean, it's really just an app. You just download an app onto your phone, you go through a KYC process, and like voila, you've got a bank account opened, and your card arrives in the mail, the next few days, and there's no branches and nothing like that. And I think actually South Africa, from that perspective, like there's certainly like good banks in South Africa that are following that model, and I think very successfully. So I think the fastest growing banks in South Africa today are more along that digital only or neobank model, which I think is really awesome, and it definitely shows that South Africa is certainly on the cutting edge. But I still feel the cutting edge globally, we are so far behind what us as a consumer should expect from our banks, and it's always like feels a little bit hesitant that banks are not moving into that breach, and I'm not exactly sure why that is. That's my feeling. I almost, another big passion of mine is understanding like the crypto world, right? And it's not so much about cryptocurrency or Bitcoin and Ethereum as currencies. That's fine, and that's up for speculators to use. But the underlying technology underneath this thing, which is of course blockchain, but there's first generation blockchain, which is what we may have seen from Bitcoin. Sort of second generation would be something more like Ethereum, and there's almost like this evolution into maybe even third generation and potentially even fourth generation blockchains, which is all around trying to create this idea of this internet of value, if that makes sense. So, and really, if we think about payments today, especially on the internet, we have really two very distinct channels. We've got, our web browser, which delivers us content, right? If we go to YouTube and we stream, or we go to Netflix or whatever it is, we've got this content channel for sure. Even Takealot, we're ordering something, we can go and browse, things, we can add them to a cart or whatever it is. As soon as we then need to move into payment, we flip into another channel, which is like a payment method. We go and check out with whoever, some payment card company or PayPal or whoever it is. And they're very distinct channels. Content and payment are separate. And it totally does make sense. I mean, you even see this in the physical world. If I go and buy a cup of coffee, at Starbucks, the coffee gets delivered to me, and then I still have to take out my card and pay using some other mechanism. There's no connecting of these two things. However, interestingly, with the blockchain world, we're starting to see like a collapse of these two things into a single channel where content and value can be really inside the same channel. And I think that's a very interesting model, because it means now suddenly the internet is not just a content delivery network, but it's also a value transfer mechanism. And as soon as you start to see that, you go, well, where does the bank now play its role? Because if you think that the bank itself is really a custodian of the payment channel, if you think about it from a consumer perspective, I've gone to the bank to make this payment, or I've tapped my card on this device and that hits a bank to make this payment. It's really outside of Netflix directly, or it's outside of Takealot.com. Now what we're seeing with Ethereum is like, no, we can bring those together. In fact, I can have a payments experience that is just between the two of us. Like, we really don't need a third party intermediate between us in order to have this conversation. We could also, while delivering content to each other, we could also deliver value to each other over exactly the same channel, which I think is also a very interesting thing that banks have got to start to figure out in the next few years.
Because I see that Twitter is experimenting as well with something they're calling the tip jar. So if you happen to be a qualified person on Twitter, I like your content, I can tip you. And one of the difficulties that they're having is what payment mechanism do they use in order to facilitate it? And exactly what you're talking about is where content and payment actually comes together. And we've got to find a better way to do it.
Yeah, exactly. It's another perfect example. And so with that Twitter tip jar, today I sit here with a credit card and a bank account, and if I wanted to make that tip jar payment, like, Twitter would have to direct me off to some kind of third party,
PayPal or something,
right? And suddenly I've stepped out of the channel. Yeah, exactly. Exactly. Whereas what Ethereum is trying to do, and some of the third and fourth generation blockchains are trying to bring that experience into your browser. And so when I click that tip jar, my browser will actually deliver value directly to Twitter, or even directly to the person who tweeted. In fact, Twitter is not even part of that experience.
Absolutely.
Yeah. But I mean, obviously the Twitter tip jar, probably they're quite keen on their cut. So it probably will today flow through Twitter. But the future of the network is that we can have a direct payment experience between two individuals, no third party intermediary, which I think is really interesting. It's almost like if you think about the telephone company in the sort of 1980s, pre-internet. I know internet was like in the 80s maybe, but I mean, it wasn't huge. But like, the telephone company really was the custodian of communications, right? If you wanted to communicate with someone, you had to pick up the phone and do it. The internet came along and just kind of disrupted that whole thing. It's like, actually, it's more efficient to communicate over this totally decentralized, demonetized, democratized network. And so if I think about banks today, they're in the position of where the telecoms companies were in the 80s and 90s, of going like, oh, okay, there's this new thing coming that like really disrupts communication. What is it? How are we relevant in this new world? And it's not to say that you're not irrelevant. You just have to reinvent yourself and figure out where you still add value in that new world, right?
And I guess what's so important is, and maybe that's what the difficulty is to still represent yourself as the custodian of people's money and payments, security, everything that is stable in the world, but at the same time be innovative, relevant, and adaptable.
Yeah, absolutely. I mean, and who's to know what that looks like yet? I mean, it's science fiction right now. I think we've got some ideas of what those models may look like, but of course they probably are on the fringe of like chaos, and on the fringe of potentially funding terrorists and all those kinds of bad things, because there's no regulatory frameworks around them yet. But those things will come. We've got to start in a chaotic mode, because that's the best way to kind of experiment and understand these things.
Anything beautiful gets created, is taking chaos and bringing it to
and then bring some control over it. Absolutely right. Yeah. And so the winners are the ones that I think start to understand it earlier, right? I think so. I'm not 100% certain.
So really what you're saying is it's about personalization. It's about understanding the customer and the very, very unique lifestyle that your customer needs, lives, and actually could benefit from. It's about being cutting edge in terms of a global understanding that it's no longer regional. It's this interconnectivity. It's about the payment methods and being relevant to this new world order that is demanding something a lot greater than a traditional payment method. It's really just about being relevant, isn't it?
Yeah, that's 100% right. I think there's also potentially, another way to look at it is to say, if you think about lending of money, right? I mean, you can see it in a way that money belongs to me and I'm loaning it to you, right? And I expect it to be paid back with interest. Another way of seeing that, of seeing that really that same transaction, is to say, actually, Howard, I'm making an investment in you and I'm your partner, as you profit from this investment over time, right? It's flipping from having like a debt-driven sort of view to more of an investment-driven one, right? And I think that's also a very interesting like paradigm shift that potentially banks could make. I think they do this in some areas, but imagine the sort of traditional student loans market, for example, right? It's, a very high potential individual comes out of school with 8 distinctions and is now borrowing money in order to pay for, her school fees, her college fees, right? And there's this big piece of debt that now attaches itself to this person. Try and just reimagine that in saying, actually, this is a very high potential person. I would like to invest in them, right? And I would like to take part in their in their learning and be part of it. Exactly. And as they grow and make more money and make more profit, I would like a share of that, right? As opposed to putting them into this debt situation, which is like, I want, to extract value, rather just take part in their overall like value growth. And I think that's such a cool mindset to have.
Absolutely. Incredible, because that's thinking completely differently and not traditionally in terms of how the banks have always thought of it. Unfortunately, we do need to leave it there. We are out of time.
Awesome.
Tom Wells, CIO at Synthesis, Director at Synthesis Software Technologies, talking to us about the future of banking. Thank you for taking the time. Don't forget to subscribe to our YouTube channel below. I'm Howard Feldman. This is the Synthesis Podcast.